Welcome to this video as I explain some of the basics of investing for beginners. It will illustrate some different accounts and investments you can hold. Investing can be tricky, so make sure you do some research to avoid any mistakes. Let's begin by illustrating investing to that of farming. If you are going to start a farm, you need to decide what type of farm you want. Then you need to decide what you're going to grow on that farm. For example, do you want beef cows or milk-producing dairy cows? Beef cows make great meals as they can be turned into steaks, but dairy cows can produce milk that you can sell before they are turned into hamburger meals. Are you going to keep your cows in the outside pasture or inside the barn? A barn can offer shelter, but it is more expensive than just a pasture. The same type of thought can be used in investing. Just like you need to decide on what type of place you'll keep your cows, a barn or a pasture, the same goes for the type of account you need. Let's look at the different types of accounts. An RRSP is a registered savings account. It offers a tax shelter as it reduces your annual tax income for that year. A non-registered account, sometimes called an open or an investment account, has no shelter. Whatever you make on it is taxable. However, there is virtually no limit to what you can invest in this. A TFSA, or tax-free savings account, offers tax protection on anything that is gained in the account. However, there is a limit to how much you can put in each year, but the growth is virtually unlimited and tax-free. Once you pick the account that is right for your needs, you need to decide where to invest the money into. You can invest your money into a bank's saving account, or a GIC, which is very safe, but you make basically no interest. If you select mutual funds, the money is managed by the bank or a broker. It can grow, but has some risk, and the bank will take a couple of % each year for their work on it. If you buy stocks or ETFs, exchange traded funds, the money is put into just one company or one sector. If that company or sector does well, so does your stock or ETF, but it is more risky and you must do the research and trading yourself. However, it is one of the cheapest options as there are very low fees. Another option is to have the bank or broker manage the money professionally for you. You pick the risk you are okay with, and they do all the work investing it for a small fee that they take from your gains or the investment. Now let's look at two common investment accounts, RRSP versus a tax-free savings account. How do you decide which one is right? So when considering an RRSP, look at your tax bracket, or the marginal tax rate. This is an example in 2020. So for the first $44,000 of income you have, you're going to pay approximately 20%. If you make this or less, this RRSP probably does not make the most sense. As you climb each tax bracket, there is a potential savings. For example, if you make $44,000 to $48,000, you pay 24%. As you move up the brackets, you'll notice that you pay 29, 31, or 33%, and so on. The goal is to reduce the amount of taxes you wish to pay. So every dollar you put in to an RRSP reduces your taxable income. But don't forget, as your RRSP grows over time, for example, if it grows 5% for 20 years, you're going to double your RRSP amount that you have in there. So when you redeem that money and cash it out, all that money becomes taxable, and it may push you up to a higher tax bracket. So you're going to want to do a little math to decide what you're going to be in a tax bracket when you retire or need the RRSP money, because you don't want to push it into a higher tax bracket and not be of benefit. Now let's look at the advantages of the tax-free savings account. The money you put into it can grow and you are not taxed on it, even when you take it out. This has become a very popular option if you do not need to consider a tax deduction. However, you are limited to how much you can put in each year. But once the money is in there, there is no limit to how much it can grow, all of it tax-free. As a footnote, do your research if you plan to use it for business trading or non-simple investments. Once you have selected the account or accounts that meet your needs, let's look at what investments you want to put the money into. You can invest the money into a savings account and make very little interest, but it is safe. Or you can put it into something safe like a GIC or bonds, treasury bills, which also are very safe, but make very little interest. You can use the mutual funds, which spread things out over a number of different companies. An ETF is similar and spreads it out over a sector. Or you can buy an actual stock in a company, and as that company goes up, so will your investment. Each one of these become more risky though as you move along this line. So do your homework and decide what's right for you. If you do not want to do the research and you prefer to keep it simple, you can have a broker manage the money for you. This is usually called a wealth management portfolio. They do the research from their education. They put the pieces of the puzzle together. They look at worldwide investments that make the most sense, pool the money together, and invest it on your behalf. They only take a very small fee for doing this, and they select the risk portfolio that makes the most sense for you. You will find that most banks and brokerage firms offer these services. I use the discount brokerage firm Questrade as they offer low fees and a good service. You can set up a self-directed individual account for your tax-free or RRSP and manage your stocks directly, or you can set up a Quest Wealth account, and that portfolio will be managed by Questrade either in a tax-free or a registered account. At the time of making this video, Questrade is offering a cash reward for setting up the self-directed account and funding it, or 1 month free in the Quest Wealth portfolio for using this QPass key that's on your screen now. This is my refer a friend number. Please feel free to use it if you decide to set up a Questrade account. I hope you have found this helpful. As always, please do your research and consult a professional before doing any investing.